Okay, so today I'm going to answer any questions that you have, and I may also show you how to run the extensions in Thinkorswim once we're done, but I wanted to see what other questions you guys had. Now, one of the questions was, if there's not a specific setup, then which of the levels are more important? Well, first of all, the 3 setups that I run every single day, or when possible, because actually the 2 steps don't show up that often. But the 3 setups are price cluster setups, which are the coincidence of at least 3 or more Fibonacci price relationships that come together within a relatively tight range. Symmetry setup, which can be one single symmetry projection, or you could have multiple symmetry projections. And then the 3rd setup is a 2-step pattern setup. Okay, so that's that doesn't show up quite as much. I mean, we did have a gorgeous 2-step pattern. Let's see, that was going to be back over here. And let's see, it's a little bit difficult to see right now, but oh, come on, why isn't this coming off? Okay, so this was a 2-step pattern setup. So it's basically a zigzag with specific price relationships that come together within a relatively tight range. So those 3 are the setups. Now, if there's not a setup and you just want to trade against single lines, are there any that are safer to trade against? Well, the safer ones would be 618 retracement. And of course, symmetry by itself is a setup. Or, there are times where you can look at a 1272 or a 1618 extension, because you definitely see termination of moves at those extensions. Okay, but would I trade against a regular 50% and expect it to go really well? No. It might hold, but there's nothing that tells me that that would be a standout decision. So let's see what other questions I have. Okay, so how do we read timing in the chart? Well, first of all, that 2-minute video is on YouTube on how to, or what to look at. The timing is really only relevant if we're going straight up or straight down into the timing cycles. If the market is sideways into the cycles, then there's no predictive value. So if a market is going straight up into a cluster of 9 cycles, you want to anticipate a possible failure and pullback, or pretty much a reversal of whatever the market's doing into it. If the market's going down into a cluster of cycles, you're going to look for a possible low and reversal back up. And it's probably only about 60% accurate when you see a time cluster. And, you need to wait for a trigger. That's, with a trigger, it's probably 60%. Because there are going to be plenty of time windows that the market will just blow through. But it's worth knowing or being aware that the potential is there, so that if you do start to see the reversal signals as far as triggers, then you can jump on it. Okay, so it's just that it's higher probability for a reversal back down within this time window. That's S&P cash. Okay, so that was on... All right, so as far as these vertical lines, all I'm doing is basically showing you where this timing came in. Okay, and I projected it from the last high, and you always go and look over here, and then you'll know what I'm looking for. So if it says DTP, low, NQ, then I am anticipating a possible low and reversal back up. Okay, and that's what we saw via this histogram, but I'm just going to run it again, so might be a little bit easier to see. Okay, so let's take this reports dynamic. So I would have projected maybe it's at 16 bars for the next possible low. Okay, and you see where this stands out, that's where we're going to look for possible reversal, always plus or minus a bar. So I save the histogram underneath the chart. Okay, there, it looks better there. I don't know why it gets kind of screwed up when I go back to it. Okay, but we were trading straight down into it, and I just showed you the vertical lines to show you basically the time window and where it was coming in. So as we were testing key support at the same time that we were hitting timing, you knew to anticipate a possible low and reversal back up. Okay, and I think this might have been that other swing I was missing. No, it's not. Oh hell, I don't know where I found it. But that's how you look at timing. You look for a reversal of whatever the market's doing into it, and if the market's going sideways, forget about it. Yeah, pretty much the educational videos are all, you know, that YouTube channel. It's written up on the site. I also give you those documents. I've given you those documents on how to make money, and well, here, let me just upload it now. So I'm going to upload this. Okay, so there's two that I want to give you. Okay, so here's some of the basics about the service, and then let's see, the other one should probably be called, where's the how to make money? No, I'm trying to, here it is. So here's the other document. And besides that, all my YouTube videos are on my YouTube channel. And here's the link for that. Okay, so that's the channel. All right, so beyond that, so is symmetry more important than extensions? I would consider it, but in the direction of the trend. I would say symmetry is definitely very important. And I would consider it more important, you know, in the direction of the trend. Because if you're looking at extensions like on something like this, okay, this high to low extended, well, this is a bullish pattern. So this is counter trend. Now it worked in this case, but it's counter trend versus, you know, if you're buying within an uptrend on a pullback into symmetry, that's going to be a higher probability setup. Okay. What other questions do you guys have? I mean, when we have a setup, let's see. Let's see if I can get a good example here. Okay, like silver. Okay, so silver had support. You can use this zone for a day trade or a swing trade. If you're going to use it for a day trade, you can do something as simple as a 1-minute chart with a crossover. So let's see if I can find a silver chart. It's a 15-minute. Okay, so in this case, you would have seen a swing trade trigger in silver because you held the zone and then you had the crossover and you also took out a prior swing high. So once both of those things occurred, that was your buy signal for a swing trade. But your initial triggers for a day trade, again, it depends on which time frame chart you want to use. 1 minute might be too small for you. You know, just depends on what you want to use. 1 minute chart, 5-minute chart. Okay, and then you know that your definition of risk is going to be underneath the zone or underneath the low made prior to your buy trigger. So that's the setup. What I just showed you would have been the trigger chart, and then your initial stop either under the low or under the zone, depending on how much room you want to give it. And then you manage the trade, which means that you'll start to have a trailing stop. You move it up as you go. You know, what's the one that Avi and those guys use? Motive wave? I mean, I haven't used it myself, so I don't know if it would be easy enough for me to work with. But that might be good. Honestly, I just haven't worked with a lot of these others. They seem to not grab the exact highs and lows, and because I'm a Virgo, I want to see the exact highs and lows, for this work, because I want perfection more than anything. Let's see, what else do we have here? Okay, so like this morning we had a setup zone in IWM. Okay, not off of this swing. I think it's off of this swing too. Yeah. So depending on how you look at it, the zone that we hadn't gotten through yet was 226.78 to 227 even. Now there also was one other extension at 227.20, and it was a little bit of a two-step pattern, not exact with the measurements, into that support. Okay, whether it was 10 cents away from this or 10 cents through this. Bottom line, that was support. So let's look at what a trigger would have looked like on, let's see. Oh, I might have to use, okay. So let's say if you used a 5-minute chart, the trigger would have been here when you had the crossover, and you also took out a prior swing high. If you used a 1-minute chart, again, you have to decide whether you're going to use the 513 or the 834. Now, the 513 will give you quicker entries with higher price stocks, but sometimes for some of the other ones, you want to test it first. And if you see that there would have been a lot of false triggers, then use the 834 instead. But here, let's see, first signal would have been, okay, here's your crossover, but then it also needed to take out a prior swing high, and it doesn't look like it did it until like over here. And there's also probably some of the traders that'll just say, well, I'm just going to buy against the zone and risk underneath it. I usually like to see some sort of confirmation that says that the zone has value, because there are going to be so many zones that the market's just going to blow through. Let's see if I can find another couple of examples here. All right, so like Apple, for example, when it pulled back this morning, could you have used that for a day trade decision when it tested support? And again, if you wanted to use the faster trigger, that would have gotten you in earlier. So in this case, I would say instead of the 834, I would use the 513. So 5, and then this one will be the 13. Okay, so here's where it would have first triggered if you use the 513. When we took out this prior swing high, we had already seen the crossover, so once both of those things occurred, so your buy entry would have been around the 133 area. And, it didn't go very far, but, your definition of risk would have been just right underneath here. So that's a setup and a trigger. If you would have used a trailing stop, let's see what that would have looked like. Let's go back to 1 minute. Yeah, so let's say, if you were using prior swing lows as far as to exit, up here, it created a swing low, tried to rally from there, and it took it out. You could have had a stop right underneath there. So your entry would have been around here, your exit would have been around here. Let's see what else we had. We really didn't have any new setups in Amazon. This was just a continuation of the other. but we did meet key upside targets on this one today. Now, as far as Facebook, did we have a pullback and a support? Sure. Was it okay for a day trade? Sure. This is, let's see, Facebook, and we'd have to look at the 1 minute. So 305.24 area. What is this? What is this? No, it would be the here. So, for example, your first trigger, it looks like, would have been right around here. You know, you had the crossover and you also took out a prior swing high. Now at that point, your risk would have been underneath this low. And let's say if you used, you know, a trailing stop, may have gotten out when it took out this middle low here. You know, if you're going to use a tight trail and put it underneath the swing lows. Let's check. Yeah, I didn't really have too much there. Now Tesla may have triggered, but Tesla would have gotten stopped out, I believe. It depends on where you placed your bet against. That one's definitely not acting well. Gold, for example, okay, so here's that support that we hit, 1762.20. Let's see what that would look like. Okay, maybe that's actually, yeah, it's 1761.80. So that was right down here. So if you looked at it for a day trade, again, use a 1 minute chart, 2 minute, a 3 minute, a 5 minute. You have to decide what you're most comfortable with and which combo you want to use. But we hit and held that area. You had the moving average cross over to the upside here. This is actually the 513. And you took out a prior swing high. So you would have been long or around 1765.70 maybe. And the stop would have had to be, well, it doesn't have to be, but ideally is underneath that prior low or underneath the support. And then, you know, if you want to keep it for overnight, you know, you can start with a day trade, but don't keep it overnight unless it also crosses on the 15 or the 30. But for that, I absolutely use the 834 combo for that. I have not tested whether the 513 is good enough. I guess it would depend on which time frame trigger chart you used. But it looks like that would have also been, yeah, it was also in a buy mode via the 15-minute chart by the end of the day. So, you know, it could have started as a day trade with very little risk, and you can actually keep it overnight for a potential target of 1808. Okay, are there any other questions before I show you how to maybe run extensions on Thinkorswim? Okay, it doesn't look like I have any other questions there. So I think we should do the one on, let's do the S&P. Yep, this is some old work I did on here. Let's just clear the drawing set. Okay. All right, so you may have to go back to the other video to see how to set up the actual tool on Thinkorswim. And I do have those smaller or shorter videos on that. But if you're going to run an extension target, well, first of all, you have to think about where are you running the target from? Where is the setup? Okay, so let's say this was the last setup, this high to low. Let's say there was support there. Then you would run the target from this high to this low and extend upwards using 1272, 1618, and 2618. Now, also though, you know that some of these swings were also into prior setup zones. Well, we never took this out, so those targets would also be valid. Okay, so let's just see how to use that tool again. So I'm gonna middle click the mouse, and this comes up. And if you're gonna look for the retracements, which also do the extensions, you're gonna click on that one. And then, for example, click on the high, click on the low, and there are your targets. 1272, 1618, and 2618. Okay, but those are just the targets off of this particular swing. If you want to erase single lines, you hit the control button and left click, and it will erase individual lines that you want to get rid of, you know, that are mucking up your chart. And then, for example, we can also look at these other extensions, which is something I did on the update tonight. So let's say we're going to click on this high to this low. And then here are those target swings. Up here, 4203. Up here, 4228. Okay. And you know, you're going to start to, if you start to run quite a few of these, you'll end up with even a cluster of extensions. Let's, let me just get rid of these lines so they just don't muck up my chart. And what if you also wanted to run the extensions of this other swing? Well, first of all, let's get rid of that. We'll go back to the retracement tool. Click on the high. Click on the low. Okay, you already went through, well, you hit the extension here and came off of there. So since we cleared it, we don't need it anymore. And then it's also going to give you, oh wait, was there another? Yeah, there was another target off of here. Actually, I think it was only the, what was left? The 1618? So does that make sense? You're just clicking on a high to a low or a low to a high for your extension targets. I think you go here. Let's try this. Okay, here it is. Yeah, I have it open, high, low, close. Snap drawings to open, high, low, close. And apply. And also, you know, if you don't have enough room at the end of the chart, like to see levels, I think for that, appearance, let's see, is it appearance or no, time axis, you can tell it how many bars to go to the right. You know, if you wanted 100, then you change it to 100. You typically don't need 100, but you know, it's all up to what you're trying to achieve. All right, so give me something else to do an example on. Like we did that, we have that IWM setup, right? On, that was obvious on the 30-minute chart. It was around the, where did that come in? 227. Okay. So that was a pretty shallow pullback, and the target's in that. Just click on the high, click on the low, and this is where I got the targets from. Here's your 1272, target 1, 1618, target number 2, 2618 is target number 3. Okay, so if I'm busy, you can easily run your own targets by running, you know, the swing into the zone, you know, which in this case was this high to this low, and then run those extensions. Click on the high, click on the low, runs your upside, or click on a low, click on a high, it runs your downside extensions. Okay. Do you need another example, or is this enough to get you started? I mean, we can look at a downside extension, but we need, let's see. Okay, let's see what else we have. Okay, so let's say we had a sell decision here. And how would you run the potential target? Well, you then run the low to the high using those same extensions. Now this is where it gets tricky because it's not grabbing the exact high or low, which kind of pisses me off. But so then downside target 1272, 1618, 2618. I have no idea how many ticks it is. And as far as how many, you just have to take how long is the trading day and divide it. I know that there are some charts that divide equally into, as far as the stocks. I think it's 30 minute, 15 minute. I'm not sure which else. Okay, so I think you have the idea, of what you're supposed to do. Are there any other questions before I stop this video? Oh, how do you make it a tick chart? You mean for a to use a tick chart? Okay, so we're typically using tick charts on S&P or NASDAQ, and typically we're using a 377 tick chart. So you're going to go here under where the time frame setup, and then I already have mine set up, but if you don't have it set up, go to customize list, add a time frame, change it to tick. Time interval, I might do 2 days. When I say 377, wait, I think I could just type it in. 377 and add it. And then apply and OK. And then it should show up in your list. Does that help? And if you wanted to try a smaller tick chart, again, that's your choice. It's also your choice whether you want to use the 513 EMA crossover or the 834. Sometimes the 513 is too fast. You have to just kind of check the chart. Now you just, when you're ready to change the chart, let's say I'm just looking at a daily chart right here, and you want to go down to a trigger chart, then I just choose 377 tick chart. This one looks like it's set up for the 513, which will give you some closer entries. But sometimes that's a little too dangerous. It's going to get you in closer to where your definition of risk is if you break it down into ticks. Because if you use a 1 minute, that's going to be a lot later. Well, depends. But the 377 tick chart will get you in typically way closer than the 1 minute chart.